Welcome to the daily update. This is being prepared Friday, February 25th, where we'll look at the action in the market today and then see how things look for Monday, February 28th. And this is the daily video. I do plan on recording a weekly video where I look at different charts. I take a bigger picture look at things. So if you find this daily video valuable, you might also want to watch the weekly video, and I'm hoping to prepare that over the weekend. It was a pretty interesting day. Friday, we saw a follow through to the rebound. Not an awful lot has really changed technically. But what is really interesting is the big move up on Thursday came from growth stocks. But what we saw on Friday were value stocks that really started to advance. Growth didn't, they were up, but they weren't leading the way on Friday. So that is kind of interesting as we're seeing this battle going back and forth. So let's go over things to see how they look for Monday, just to go back through Friday at the open. And I watched the futures during the night, and they were down about 0.5% overnight. It looked like, okay, Thursday was just a relief bounce, and now we're going to just see the downward trend continue. Well, as we got closer to the open, futures prices started to recover. And it wasn't necessarily because of the economic news. A lot of the economic reports that came out were hotter than expected, meaning that the economy is going too fast. The Fed is going to have to raise interest rates more and more likely at the meeting in March, which usually would have sent things lower. But geopolitically, it looked like things have calmed down just a little bit between Russia and Ukraine. At least there have been reports that Putin is willing to sit down and talk. The one I read said after he takes Kiev. And even though I pronounce it Kiev, I guess that's the Russian pronunciation. So a lot of people, out of a little bit of protest, call it Kiev. But I've known it for Kiev for so long, I just call it that. So I'm sorry if I'm offending anybody by saying it the Russian way. But we did have a gap higher at the open on Friday, and it was kind of a surprise. And I thought, okay, here we go. Let's see if we see any selling into strength. Well, that didn't really happen. And we saw follow through buying from Thursday into Friday. And as the day went on, prices climbed higher. We ended up closing at the high, and we were up 2.24% for the day on above average volume. We saw a lot higher volume on Thursday. That was really above average, but Friday's volume was above average. So that's pretty healthy. However, 2 strong days like this, and with this internal battle that's going on between growth and value, the technicals still remain negative overall. Now, we could get better from here. And after the weekend and people have a chance to digest what's going on geopolitically, looking at their charts and so forth, we might see a continuation of this, but the market still has a lot of work to do if it's going to get back into a positive technical picture. We still have earnings coming out on Monday. We're still dealing with inflation and interest rates, and of course, the geopolitical concerns that seem to dominate things right now. So what can we say? Right now, I'm just calling this a relief rally. We had a strong up day Thursday, a strong up day Friday, but our technical picture really still looks negative. And now, instead of prices being at the bottom of the short-term range, where they were after Thursday, now we're kind of in the middle of that short-term range. Russia, Ukraine, as well as Canada continue to dominate the news. And as I just said a minute ago, value did lead the rally, which is kind of interesting as we're seeing things shift. And I'll show you what I'm talking about as we look through the charts. The economic reports were hotter than expected. which didn't freak out the markets all that much, at least the stock market. We continue to be overvalued, and there is a strengthening trend. The ADX is really confused right now because it's seeing movement all over the place. The trend is still negative, but we just came off of having 2 solid up days. So the bias and the momentum, I would say the bias is probably more positive because of the up days, where the momentum continues to be more negative. And I'll show you what I mean by that in the charts. So let's go through sentiment. With the up day, we saw a little bit of decrease in fear overall from the previous day on Thursday. And this is showing the historical chart here, where Thursday we had come down here. Well, Friday we bounced back up slightly. So fear is subsiding a little bit. And then this is something that came out on Thursday. So I'm just going to go through it again. This is the American Association of Individual Investors. And each week they put out a survey. Are they bullish or bearish on the market? And they are very bearish. And since these investors tend to be wrong most of the time, when we get to extreme readings, we want to use this as a contrary indicator. And so far, that seems to be working. The survey is taken earlier in the week, and then after they came out with these negative numbers, boom, we saw 2 solid up days. That could potentially be positive. The VIX, because we had an up day, it declined on a closing basis, and we declined on the daily chart, and we closed at the low. As prices continued to advance throughout the day, the VIX kept falling. The VIX of the VIX also is falling, and we're below these 2 moving averages on the bar chart, and we closed below the 2 moving averages on the line chart here. So fear is decreasing a bit, at least for right now. Looking at the Ulcer Index, it's still continuing to climb, even though here you can see the bar. Here's Thursday's bar, which is green, and then we, boom, shot back up. We're really right back into the range where we've been at for the last few weeks. But the Ulcer Index, which is another fear gauge, it increased ever so slightly. And then here's just a longer term view of that same chart. Then we also had the final reading of we had the final reading of the University of Michigan Consumer Sentiment. The first reading came out a week ago. Now we get the final reading, and it was actually revised up a little bit, but from a context perspective, we're still negative overall. The blue line here shows that people are not very happy right now. But at the same time, we're showing that the 2-year Treasury is increasing. And a lot of times, you can see right here, there was a strong correlation between the two when sentiment was going up and yields were going up at the same time. Right now, they're going in opposite directions. And down at the bottom, I just have the difference between the two. And they're showing some kind of extreme readings that we've seen before. So something is probably going to switch here. Either people need to start feeling better about things, and that doesn't seem very likely right now, or interest rates need to come down. That doesn't seem very likely right now. But as we go through time, something will need to adjust one way or the other. As far as our sectors, all the sectors were up on Friday. And you'll see at the very top of the list, these are growth sectors: materials, financials, staples, which has just been getting creamed, utilities, healthcare, energy, real estate, which has also been struggling. You look down at the bottom and you see tech, communication, and discretionary. These are more of the growth plays. Down here, they were up, but the value plays were up even more. And then looking at things since the all-time high, energy still continues to be in the lead, where now discretionary has gone back into last place, even though it had a really good up day. And then we have our communications and tech and real estate. Those are the different areas that are struggling. even though they had a good day on Friday. As far as inflation, the BDI actually declined a little bit. And then I'm moving this one chart, the CRB, I moved it over to the inflation area because these are commodities. Sugar, coffee, cocoa, orange juice, the things that we buy, the things that we consume. There's also precious metals and bonds and other things that are mixed into this. But when we're seeing this rise overall, that's also suggesting that there will be inflation because these are the raw materials that companies have to buy. And if they're paying more for these as prices go up, eventually that's going to come through to the consumers and everybody is going to be in a more inflationary environment. Even though it declined 1.7% on Friday, it's still in a solid uptrend overall. As far as the Fed watch, again, just to go back and review this, we are starting to switch back now to the 1/4 to 0.5% increase, where we had been at about a 95% chance of 1/2 to 3/4. And then after the CPI came out, things started to switch. And this is where we're at now, which we actually saw a bit of a decline. Now the tug of war might be heading back to the 1/2 to 3/4% category. We still have a few weeks until this meeting. And so this back and forth seesaw, we're going to probably see more of that as each day plays out. And here's the chart. We saw a little bit of a decline in the 1/4 to 1/2 and a little bit of an increase in the 1/2 to 3/4. Then our technical alerts, we didn't have as many on Friday, but most of them were positive. The S&P got back above 4,300. And the industrial sector, which again is more of a value play, the bullish percent index crossed above 20. The NASDAQ, well, it went above 13.5, then below 13.5, then up, oh, now we're to 13.6. So it's dancing all over. We didn't see a real strength in either the NASDAQ 100 or the NASDAQ because those are more tech oriented. Where we saw the strength on Friday was in the value area, but the NASDAQ BPI did cross above 30. That's now generated an oversold indication, which may be positive. And they had a bit of a recovery up in Canada with their index. It's back over 21,000. The Dow was able to get over 34,000. Real estate, the BPI also crossed above 30. So now an oversold reading has been generated. And then gold, which is just, it's a real roller coaster right now. It went below 1900. So looking at the intraday chart, really, if you look at Thursday's chart, we kind of picked up on Friday where Thursday left off and we just kept going. And we ended up closing at the highs. So this is pretty positive overall. But if you look at this in the context of a daily chart, okay, we had the strong up day, and then we had the strong day on Friday. We're back into our range right now. So we could continue to shoot up higher, but our charts aren't telling us that yet. Then we're back out of correction territory from the way that I calculate things. We're down 8.59% from the all-time high. Here, this red line here is the all-time high. Here is the close as of Friday. And this is what I'm talking about. Even though we had a good, powerful day, growth actually declined and value advanced. Also, the ratio between these two charts shows that growth declined and value advanced. And this is another one. The NASDAQ 100 underperformed the S&P 500. As far as our trend, the ADX was pretty much flat because it's picking up a negative trend right now. And if we do continue to go higher, look for the ADX to decline and possibly get down into a trendless environment. We're going to have to see some real follow through for this to switch over into a positive trend. Then looking at the mass index, we're We have a signal on the books right now, and we're just waiting for something to happen definitive. Is it going to be up? Is it going to be down? From what I see, the jury is still out with that. The Arun didn't really change. With the red line peg near the top, it declined a little bit, but it shows that sellers are in control. And the green line went sideways, which means it's not picking up this buying strength. So overall, the oscillator, it advanced a little bit just because selling declined a little bit. So we're still negative overall based on this indicator. The scorecard has not changed as far as decision point. Breadth analysis, we had a good, powerful move based on price. We shot up really big time based on price and volume. That turned this line up slightly, and we're above the moving average. We still are seeing a negative divergence based on volume, but there was a bounce on Thursday and Friday. The advanced decline ratio is bouncing up after giving us a tiny oversold reading, but we're still below zero overall. New highs and new lows, it turned just a little bit, but there were some new highs generated on Friday, but we're going to have to see follow through for this to turn back and look more negative. Accumulation distribution, because we had an up day 2 days in a row, this indicator is now looking more positive and we are above the moving average. Our short-term indicators, we're still below the 20-period moving averages. Also, we saw an increase in those stocks above their 20-period moving average in the S&P. We saw a bit of an increase in buy signals and a little bit of improvement in those that have a rising, or I'm sorry, they have a PMO that's above zero. Our moving average spaghetti chart, again, we have a ways to go just to get back to the 200-day moving averages. So there's still more work that needs to be done. The MACD shows improvement, but is still negative. STO also picked up the advances from Thursday and Friday based on price and volume, but we need to see follow through on other charts to have this look more positive. The McClellan oscillator had an up day, but it's still below zero, so it is negative. Our short-term indicators, the Stoke Rsi, it shot up with prices on Friday, and our Williams percent R also shot up. But these are pretty touchy. These can give us extreme readings pretty quickly, and so we don't want to rely on them because they can stay either positive or negative for a long time. The force index might be a little hard to see, but we actually turned green. So that's one of our shorter term indicators that is looking positive. So the short term is improving. Now we need to see, are we going to get any follow through from that to bleed on over into the intermediate term? And then just to show that we blasted through Thursday and Friday to the upside, these are big moves. My goodness, we were way down here at the open on Thursday and we closed at the very top on Friday. That's why the 1 day rate of change is showing such an extreme reading. So we might look for things to settle down a little bit, whether they're going to settle down sideways, whether there's going to be more selling. That is what remains to be seen. Intermediate term, we are below the 50-period moving averages. The PMO, it turned a little bit, but is still negative, also based on price and volume. Our other PMO study, the shorter term with those having a rising PMO, that really improved, but that's short term, and we could get to an overbought reading pretty quickly. The other PMO is also showing some improvement as well as those that are above zero. And why am I seeing this chart again? I think I screwed up on my charts. The BPI, the bullish percent index, it's coming off a pretty negative reading, but with the up day, did see a bounce. Moving average rainbow, we're just below the bottom end of the rainbow. Stochastics Short term looking more positive. Intermediate term coming off an oversold reading. Long term still negative, but could be turning. Summation index, because the McClellan oscillator was negative, it continues to decline, but not as much as it has been, both based on price and volume. All of our momentum oscillators continue to be negative, even though some of them turned up slightly after Thursday and Friday. And we've crossed back below with the Pring bottom fisher. So whatever signal that was, it didn't really generate something right now that we can look at. So I'll keep watching this. We'll see if some other indication for a bottom, because this doesn't pick tops. It's really more looking at bottoms right here. And then the vortex, decrease in selling, increase in buying, but continuing to be negative overall. The CCI is coming up out of an oversold reading. The standard deviation, because we're going back into the range that we've been in for so long, it still shows a decrease when looking back. The Sean trend meter, it's coming up after giving us an extreme negative reading. So that could be positive. The CMF, which I haven't shown for a few days, it picked up Thursdays and Fridays upward movement, but you can see here, it also, where we were going down, this was still generating fairly positive signals. As far as our trading systems, the Elder system is still neutral with blue bars, and the SAR continues to be negative, which is a little longer term. Our different charts, the Heiken Ashi, this is looking more positive because we have the open candle. The Kegi chart, it's still negative because it's red, but it's coming back up slightly. So if we have some follow through buying and an up day, these bars might turn back to red, back to black. The Renko chart actually redrew itself. We had been seeing a bunch of red blocks going down. Well, with all this movement that's going on, it's redrawn and we have one up and now two down bars. So it's more mixed to negative right now. 3-line break is showing a little bit of improvement with Thursdays and Fridays move. Equi-volume, green candles, looking pretty good. We might be overdoing it on a short-term basis based on the ease of movement. Longer term, we are seeing some improvement. Point and figure, because of the shot upward, it is now talking about a low pole reversal. It's saying all of these zeros as a pole, and now we have some new X's that were drawn, and that could be a positive chart formation based on this way of looking at things. The Fibonacci retracement, we were down around the 50%, so excuse me, the 61.8%. We've been able to bounce back up into the 50% area, and we might even be able to regain the 38.2 level. Longer term, our arithmetic scale, we're still below the moving average. If we're able to get back above that 200-day moving average, that will help the long-term trend regain a more positive look. Then here's the logarithmic, also below the 200-day moving average, but the line is still going up. So if we can get back above that, that will really help things look better. The special K is still negative. And then here's a longer term view of that same chart. It's going to take a lot more than just bouncing back into our range for this indicator to pick up anything more positive. As far as the broad market, you can see here's the S&P. We just shot right back up into the range where we've been before. The same thing is pretty much true with the mid caps and the small caps. So yeah, we needed this to happen. You might even say we could be putting in a double bottom of some kind right here. But we need to see follow through action that is then picked up by our indicators. The Fang stocks, this is what I'm talking about. With the solid up day on Friday, they were up over 1%, but they really didn't shoot up a lot higher. The ARC had a pretty good day, up 3.35%, but still an awful lot of damage has been done here. The Dow getting back up more into the range where we've been, and we're just about at the pivot point. Usually if we're above the pivot, that's considered positive. If we're below the pivot, that's negative. And now we're getting near the end of the month where we're going to start seeing new pivot points calculated for the month of March. Small caps also back up into the range where we've been at. Mid caps back up into the range. NASDAQ back up into the range, slightly above the pivot. NASDAQ 100 back up into the range. I mean, it's a broken record here, folks. So the VIXN, with the advance that we saw in the NASDAQ 100, we did see fear decline, and it closed near the low on Friday. So the NASDAQ 100 had a good day, but not as strong of a day as you would really think. The NYSE composite, we're back up into the range that we've been in. And then this is also very telling. With the solid up day on Friday, the S&P 100, which are the bigger stocks, they underperformed. Okay, so you can take that as positive because, we're seeing more of a broad base move, or you might take that as negative because the biggest 100 stocks are not showing any real leadership right now. So whichever way you want to look at it, you can justify that. Wilshire back up into the range that we've been in, and we're really getting close to a death cross on this chart. Internationally, China's having trouble. Everything is pretty much turning down right now. All stocks, again, if the two solid days that we saw, you would want to see this go up higher than it has. Broad market, the dollar, it gave back about 0.5% of what it picked up on Thursday, but it's still holding up fairly well. Here's the weekly chart, which is now finished drawing, and we're above the upward or the shorter term moving average. Oil, it's up above 100 on Thursday, dropped down. Well, we actually declined 1.3%, and we're at 91.59 right now. Gold, man, look at this. Boom. It was down again on Friday. It's still outperforming the S&P, but we're not seeing any real strong breakout yet. Silver had a little bit better day, at least on a percentage basis, where it was up after also going down on Thursday, just like gold did. Bitcoin, it's kind of up near the upper range of the between 30 and 40,000 right now. It looked like we were getting dangerously close. We got down into the 34s intraday, but some buyers came in and were able to push prices back up to the upper end of the 30s. As far as bonds, our yield spread here still shows that things are declining. Looking at the Fibonacci retracements, we're now still above this red line, which is now acting as support for interest rates. That's in the 10-year yield. We saw a little bit of an uptick in yields on Friday on the 30, 10, 5, and 2, and a little bit of an increase in the 3-month. Internationally, this just gives you an idea of what's happening with the US still having the highest yields. Bonds overall, even though they were up slightly on Friday, still continue to be in an overall downtrend. We saw a bit more of a positive bounce from the corporate bonds. So they gained a little bit in price, and their yield is now around 3.36 overall. And this is just looking back to give you some more historical perspective. Still very low, still way below inflation. As far as our relative study that we're keeping an eye on each day, that's gold to the S&P. With gold declining and the S&P advancing, we're coming back down slightly right now. So what are we looking for Monday? We're out of correction territory for the S&P. The markets remain in that short-term range. It's kind of going on. I might have to change it to an intermediate term range here pretty soon. And the S&P is right about in the middle of that range. We're still dealing with earnings season. We're still dealing with the battle between growth and value. On Monday, we have the Chicago Purchasing Managers Index, or PMI, coming out. There's the international trade in goods. There's retail inventories and wholesale inventories. These aren't real biggies, but still, if the market wants to fixate on something, it will pick that out. But it's mainly focused more on the geopolitical events, what's going on between Russia and Ukraine, the Iran meetings that are going on, and also what's developing in Canada right now. So the S&P is negative and continues to be range bound. The short-term bias is negative, but might be improving. Thursday and Friday showed some short-term improvement. That has not really bleeded over to the intermediate term yet. The long-term bias does remain positive because our moving averages are going up, but since we're below those longer-term moving averages, that is showing some weakness, and that uptrend, as long as we remain below the moving average, that uptrend will continue to fade. So thank you very much. I hope you have a very good weekend. I'm hoping to post a weekly video. I'll do that as I'm able to, but have a great time, be at peace, and I will talk to you again in the daily video after Monday's session.